Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Tractor Zoom delivering insights and dry shod boots, the official work boot of the Moving Iron Podcast. Shawn is with Hackett Financial in Boca Raton, Florida. And Shawn, there is no lack of information to talk about today. We had a hurricane hit. So far, we're batting 1,000 with technology today. So, Shawn, there's lots of stuff going on. You got a hurricane that just hit, landed, I guess, on its way to landing in Louisiana, and there was a pretty major Hurricane Laura, and they were talking anywhere from, depending on where it was going to land, upwards to a 20-foot storm surge. So, and as you kind of watch that track as it makes its way across the Americas, there's plenty of opportunity for it to mess up the cotton crop. So I guess as you take a look at that storm and what's in front of us there, what are your thoughts and how do you think that's going to affect the coming week in ag trade?
Well, if you look exactly where it's hitting, it kind of really missed the key cotton areas to the east, and it kind of missed the cotton areas to the west. So it shouldn't do a whole lot of damage to cotton exactly where it hit. Casey, I actually think it'll do more. There'll be more issues with excessive rainfall in corn and soybean areas. You know, some flooding rains at an unopportune time than cotton. I think cotton's going to kind of miss this, including the rice market. It's enough to the west where it's just missing the Arkansas rice crop, and so it just happened to hit in an area that it's not going to have and we're not really seeing the cotton or rice market really react to this. It just went in a perfect spot to not really create much of an impact, at least this particular store. I think it's more corn, soybeans that actually could have a bigger impact, because as it goes up and then bears to the right as it's supposed to, 6 to 9 inches of rain while you're trying to get crops harvested in that central south ground is not desirable right now.
Yep, absolutely true. All right, so let's jump over and talk about another weather event that's going on. It's been an ongoing weather event for the past probably 30 to 45 days. And then that's the Three Gorges Dam over in China. And if you take a look at that, they've hit a very critical area as far as what the dam looks like right now. I haven't watched my update for the week or for the day as to what's happening with Three Gorges Dam. But right now they have, I think all the spillways are open. I believe it's 10 or 11 spillways they have there, and all of them are open, go full blast. And inflows and outflows are about a 20,000 cubic meter difference between each other. So that no matter what they decide to do at that dam, there's nothing that they can do to stop the amount of water coming in and the amount of water coming out. It's just too much coming in, and there's about 3 weeks left of this of a typhoon season, and it's been a very active one at that. So I know you've been following it, Shawn. As you take a look what's going on there, what are your thoughts there, and how are traders looking at that as an effect on what's happened with U.S. ag markets?
Well, in this week's report, we talked about how we were worried about actual increase in precipitation again in China after a little bit of a respite in certain areas. And the problem is that even rains to the north feed into the Yangtze River Valley. And so we're actually looking at 2 or 3 typhoons to be coming in one after another to kind of finish off their season. And it's just going to throw a ton of rain again. And as you said, they're already at the maximum releasability factor that they can. The flow rate's as high as it can go. So anything now additional, there's nowhere for it to go. And even as we talked about earlier, even if the dam does not break, it'll simply go over the top and it'll have the same impact of having even greater flooding than the flooding that's already occurred. Remember, there's a major food crisis going on in China right now. Prices are exploding higher, and they're buying tons of product from everywhere, including us. And of course, the main rice crop is the lower Yangtze River Valley. And while they'll never tell you that their main rice crop is in trouble, any additional or ongoing flooding in that key area during their really important time for the main rice crop even puts their staple food even further in jeopardy, and even increases the concern or the panic over, well, what do we do if we can't get our access to rice? We're going to have to buy more wheat. We're going to have to buy whatever we can get our hands on. And so it's just escalating, the food crisis there. And, it's unfortunate. It's really an unfortunate situation. And I feel for the Chinese people. At the same time, it is going to create and has been creating a bid in our markets and some higher prices. And so it appears we're the beneficiary of their misery right now, Casey. So,
Yep. And it's a sad situation that's going on over there right now. And then
Yeah.
if something were major catastrophically to happen to that dam, there's basically 450 million people would be displaced. And if that's half their population. Well, no, a little less than half the population, but it would be basically the North American continent would be displaced if you were to put it into perspective.
And remember this, Casey, that when we studied and went back, I mean, this is not the first time China's had epic flooding. They tend to get these periodically, once in a while. They get these, and we looked at what happens after they get one of these. They really can't grow much for a couple of years. Yeah. It's not like, okay, we're back to normal next year, because the soil gets run out, the topsoil moisture gets taken away, there's pollution, the infrastructure is taken down. I mean, you're talking about reduced production for a couple of years if we were to have a catastrophic failure, Casey. And so I want to emphasize that while we pretty much know this year's crops in that area are in trouble, it would be a multi-year affair if we have a major breakdown of the Gorges Dam. And so it would be something that would have very, very long tentacles. And remember, we've been talking about how the weather for Northern Hemisphere in 21-22 is going to get extremely unfavorable.
Right.
So just think, if we're already having a food crisis and it gets to that epic proportion and the rest of the world has food production problems, the situation's going to become really historical. In terms of the humanitarian consequences. And so there's nothing we can do about that. Only we can do is observe what's happening and try to manage it the best that we can. But it does appear, that U.S. ag prices are going to have a tailwind from this for quite some time. So
it's a bad thing.
Yeah.
All right, so it's Thursday, so we have the U.S. has the export. USDA comes out with the export report for the week, and soybeans, they have a pretty high expectation for soybeans right now. They're looking at about 1.2 to 2.2 million metric tons, and corn right now they're looking at 700,000 to 1.3 million metric tons to be exported out. I guess as you take a look at those numbers and then what's going on with Hurricane Laura and how that's going to wreck that basically Galveston and New Orleans port area, which is a main exporting port for these crops. I guess, what are your thoughts on that, and how do you feel that's going to stack up today?
Well, I mean, the storm is moving fast, Casey, so it's not going to hang around. There will be some delays, there will be some closures, there will be some delays in getting things done, but it looks like where it directly hit, it should only cause some minor delays in that sort of thing. So this is different than if it went right over the top, like it's done in past years where you could have months of delays. Mm-hmm. That doesn't look like, at least this storm, it doesn't look like that's going to be the case. It looks like it's going to be more of, everyone just evacuating, being out of harm's way for, a week and then coming back and getting back on the stick. So I don't think this is going to be a major delay in getting product out the door. I just think it'll be a short-term thing. And so I'm not anticipating that our exports or our shipments are going to be suffering much more than on a short-term basis on this particular storm. Had it been a little bit further east, it would have been a far different story, like what would happen in years past. And we had some storms go right over the key port, but it just went far enough west, and it's just not going to cause that kind of, at least according to us, not going to cause that kind of a detrimental situation. So,
okay, all right. So another thing that caught my attention this morning, I was reading through the headlines here of this little report that I get from Pro Farmer. There's China was talking about how it sold 89% of its 3.98 million metric tons of corn that put up for auction on August 27th. And it looks like they've been offloading a lot of corn via auction here of late. What's your thoughts on that? What do you make of that?
Well, remember, because they 5 years ago they decided that because they had this huge low quality corn stocks that they built up over many years. that the feed industry didn't want it. And so they figured, well, the ethanol industry can take it. And so let's go support let's go support ethanol, clean fuel, clean up our air. And so they chopped through a bunch of that low quality corn that was sitting in government storage. In fact, that corn is gone. They had actually admitted that corn is no longer available now. And so what they're auctioning, Casey, is what they have in storage that's actually feed quality. And so the auctions, this has been going on for weeks, and that they've been able to sell most of their auction supplies to the industry. And just remember, African swine fever means that they are rebuilding their herd at a record pace. I mean, they are starting to rebuild this herd and have to, and all that feed that's going to be needed for bean meal, i.e. soybean supplies that are needed, and corn feed, the industry, and there's no very, very tight quality corn supplies lying around. I mean, they have a major corn shortage. That's why their corn prices are $7, $8 a bushel versus our $3.50. And so there's no end in sight, according to us, in regards to their demand and their appetite for cheap U.S. corn. Right now, we've been willing sellers because everyone got so bared up over the summertime with people talking about $2.75 corn, buying $3 puts as your way to prosperity. It's just, all that bearishness convinced the farmer that there was no hope for upside. And so they've been willing sellers, unfortunately, at the lows. And they know that, I think China's aware that, that's not going to last forever. And they're trying to be opportunistic to buy as much corn as they can while U.S. farmers are still bearish. Although it looks like prices are starting to move now. We've had a nice almost 30-cent rally off the lows. And if we can break through 360, which was the July peak, then the speculative shorts could get in a world of hurt and have to really, finally cave in on their short position that they've had all summer long. And so all this continues to support a demand-driven situation, Casey, in our markets, which my goodness, I'm trying to remember the last time we've talked about strong demand for U.S. grain. It's been years, but it's here, and it's real, and it's no longer the boy who cried wolf. This is a real deal, and it's not going away, and according to us, anytime soon.
Yep. And the flip side of that too is if you take a look at a couple of these other headlines that have come out, the EU and Brazil both have lifted tariffs on corn, rice, and sorghum, I believe, and soybeans. I think in Brazil as well. So I mean, there's a great opportunity for buyers around the world now to not have to worry about paying tariffs, because I mean, we do have the largest supply at the cheapest price right now, and there's a great opportunity for our exports to really take off here the next couple of weeks.
And what I think is underappreciated, Casey, everyone keeps talking about how, South America had these big crops this past season. But what everyone's not, I don't believe, correctly analyzing is that their animal feeding units of pigs and cattle and chickens is at all-time record highs, never seen before in Brazilian history. And in Argentinian history. And so the feed demand domestically for bean meal, for corn is growing exponentially right now down there. And so even though they've had good crops, their exportable supplies are going to be down pretty significantly from last year because of the increased domestic demand. And so their available supply is going down despite having good crops. And that means that on top of the shortage we're seeing in China, that means that supply has to be made up because it was needed last year, right? Well, now it needs to be made up. And who has, as you correctly said, who's the only place that really has cheap corn available in large quantities? Right now, it's the U.S. And so we really finally are in the driver's seat to move some significant inventory out of our shores and over to foreign buyers. I'm hopeful. The bad news was doing it at a very low price. That's the bad news for us. We're doing it at a very low price. Right. I'm hopeful that we pull back, that once we can kind of put away what has to move ahead of harvest here, Casey, that we can start pulling back and being more opportunistic to have cash sellers selling at higher prices that make more sense, but selling at the prices that we've been selling at, unfortunately, is selling an historically low price. But nonetheless, it sets the stage for higher prices later, I guess is what I'm getting at.
Yep. Okay, so that brings up another point that I wanted to put out there too was Pro Farmer had their crop tier last week, and kind of from what I read, they were 5 to 6 bushels below what the USDA thought, which is a pretty significant number when you start looking at what's out there. Plus, on top of that, you throw in what happened in Iowa and where we're at. So, what are your thoughts on the overall on the average bushel per acre on corn right now?
Well, we've been saying, Casey, since late June, since late July, that the very, very hot temperatures this year all but guaranteed that we could not have an above trend line yield crop, despite the fact that the crop looked good. We went back to 1960, and every time that we had June, July temperatures at least 2 degrees above normal, whether that be hot and dry or warm, humid nights, or it didn't really, we had very, very warm temperatures. You cannot have an above trend line yield corn, at least we haven't had a above trend line corn crop since 1960. Now, moisture can determine how much below trend. So, for example, in 2010, we had good moisture, but we still came in slightly below trend and 10 bushel to the acre below the August estimate in 2010. Our view has been this. We have felt all along that we were going to have a slightly below trend line yield this year, all along, even before the storm hit Iowa. We were in the 173, 175 yield category just based upon the hot temperatures and the moisture distribution, meaning it wasn't an all-out drought. We had some drought to the west, to the east. They had some rain, so it was kind of a hodgepodge. If we factor in the Iowa situation, and what's hard about the Iowa situation, it's hard to know, how much of that flattened corn crops is going to be written off and just left there. How many farmers are actually going to go try to get some of that? If they do, how much of those ears are going to be lost? It's kind of hard, but we're going to work with a 3 bushel to the acre number on a national average. That's what we think is a pretty fair estimate. So that brings us down to 170, 172. And if you work that number with the increased demand that we're looking at a carry out of about 1.6, 1.7 bushel carry out. That's one of the tighter ending stocks the U.S. has had in 8 years. And we know that, corn prices on average were $3.80 plus or minus 20 cents throughout that period of time. So our view is that the market is starting to figure out that they need to go back to pre-virus levels that we were at before they overshot the market to the downside. And so the USDA typically makes the big adjustments, Casey, in the September and October report. We think in September they're going to kick the can down on Iowa, meaning we think they're not going to stick their neck out. We think they're going to wait until October to factor in Iowa. But we think they're going to factor in, because remember, August is just a guess. They just take a wild guess. They don't do any agronomy. The September report, they actually go in the fields and do some agronomy like Pro Farmer did, okay? So that has some agronomy to it, and that agronomy is going to start to show, wait a minute, we're not seeing the yields that we guessed in August. So we think we're going to have a first shot down in September, but it's not really going to be because of Iowa. The Iowa effect will be in October. When we get done with it, though, we think we're going to find ourselves in a low 170 yield area, down from 182. That's quite significant. And by the way, that happened in 2010. And that happened in 2011. Those are the last 2 times that we had hot summers with some that weren't what I would call all-out droughts. And we dropped 10 to 12 bushels to the acre from the August report. It looks like we're going to repeat yet again that same experience right now. That's what it looks to us. And so, so the corn market is in a mission to decide, what's the fair price, and it's not, we're in the midst of it right now. And so what we're trying to tell our customers, Casey, our producers, cash sellers of corn, we're really, really big on, we know you got it. Maybe you got to sell some, and I understand that you still have to pay those bills. You still have to survive, but we would really, really, really promote the idea of corn in the bin is not a sin. That's what we've been saying. Corn in the bin is not a sin. Corn in the bin is, for the next 2 years, is going to be really important for producers to keep as much corn in the bin as they can, because that's going to be the race in the hole against this adverse weather that we're seeing. And so, if we're cash seller and we've made some sales because we've had to. Please don't sell any more than you have to. Resist temptation to oversell this 30-cent rally, which most will want to sell more than they really should. That's our advice, and that's the advice we're giving to our customers, Casey.
Yeah, you should make a T-shirt, man. Corn in the bin is a sin.
Corn in the bin is not a sin. I should make
Make a T-shirt, man. Everybody else, you got a T-shirt for something. Might as well make one. Good stuff, man. There's a ton of information out there right now, Shawn. Plenty of stuff to keep your eyes on. A lot of game changers out there. I mean, this has been a 2019, 2020, and looks like 2021 are just going to be just one flock of black swans after another flock of black swans coming in. So, I guess as you take a look on your closing thoughts here, what are you really paying attention to show what's going to change up here in the ag market?
Well, I think the big picture for us, and I want to lay this out to everyone, is this: the virus caused an overshoot in ag markets, especially grain markets, that should not have happened. I want to put that out there, that was an exogenous rogue wave event that overshot grain prices below what they would have done otherwise, and created a rare overshoot pocket that we are now coming out from. Okay. And we had talked about on your program and in our reports earlier in the year that this was going to be a counter seasonal year. We'd be doing everything opposite of what normal seasons would suggest. Instead of making highs in late June, early July, we were making a low, which we did. Instead of making lows in late September, October, we'd be setting highs. We are doing exactly the opposite of what we normally see, because it's a pre-La Nina year. Now, what I want to emphasize, what saved this year, Casey, from having yields be far worse than they're going to be, is that we had great subsoil moisture starting the season, meaning we had we had saturated soils from the year before. We had ample moisture during the winter. So we started the season off with the tank full. We're moved now into a full-blown La Nina year in 21-22, which means a very dry winter coming up. And we're going to go into next spring hot and dry with no subsoil moisture. It's the first time we're going to start the season, Casey, without ample subsoil moisture in probably 8 to 10 years. And so that means that as we move into next summer and we really get what we call a more typical La Nina drought summer without subsoil moisture, the yield issues become much more grave than what we've seen this year. And so we want to emphasize that that's what lies ahead, not only for the United States, but also for Europe and especially Russia and the big growing areas of Ukraine. They really take it on the chin during La Nina years, during these kinds of cycles. The last time that we saw this pattern develop was 2010-11, when Russia had half a wheat crop, for example, because the drought was so bad. We are anticipating that they're going to see dire conditions like that over the next couple of years. And so Russia has become a major player, and the Ukraine's become a major player in grain exports. And if we lose those grain exports that the world has relied upon to avoid having to buy from the United States, it really sets up a wild situation. And so we want to, have everyone understand that this is we're entering this La Nina phase within a grand solar cycle, which amplifies the effects, just like it amplified the El Nino effects when we had those historic flooding. So this is not going to be taken lightly. This is to be taken very, very seriously. And that's why we continue to support the idea of having you as a farmer try to store grain if you can, because that's really going to be how you can manage this. And then when we get to the point where the prices become much more attractive again, and we really get a price that makes sense again, because remember, when La Nina fades in a couple of years, we're going to have a couple of years where we can grow something again for a little while. You want to be able to sell a few years out when the opportunity, selling 2 years out in 2012 was a really good idea, right? Yeah. Selling 2 years out in 2008 was a really good idea. We think selling 2 years out in 2022 is going to be a really good idea, because then you can have the better crop with a really good price. And then you finally can make the kind of, put some equity back into your farming business that you've lost over the last 8 to 10 years of a bear market. That's the big picture. That's, if you had to just write this on your chalkboard, if you just had to, have something, something sticky on your dartboard and something just to remind yourself of what you ought to be thinking about as a producer, please think about storing your grain and keeping that available and getting in the mindset that the opportunity to sell longer term grain is coming, but not now. So,
well, good stuff, Shawn. You have a lot of good information there. And if you haven't had a chance to go back and check out the podcast that Shawn did we recorded it live on YouTube. Check out my YouTube channel, Moving Iron Podcast, and check out the it's about an hour and a half long lecture Shawn gave on his findings and what he sees happening there, and took some questions from some folks. But it's good information, and this is not he gives you plenty of stuff to go look at and plenty of stuff to check out. So Shawn, good stuff as usual. Folks want to reach out to you and get more information about the research that you're doing, or just how you can help folks with their grain marketing plan. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. If you go on the sample report, to download the sample report, that actually will allow you to download our latest weather report that you're referring to, Casey, that your podcast was based upon. It's kind of our latest view of all these natural weather cycles and how we see them playing out, and how the next couple of years is really going to be the main show. And so we think that anyone that's open-minded to thinking about weather and climate in a little bit of a different way than what's being purported out there, and is willing to look at research, and if they're willing to at least accept that maybe there's something else going on, this might be great food for thought for greater research for them. So that, because the preparation is the key here in being able to plan ahead. And down here in Florida, we always can see a hurricane coming a week away, and we can prepare even though we're not happy about what's about to happen to us. So, and we can survive. The problem with non-preparation is, like a tornado is, all of a sudden there it is. And if you're not prepared, you're in a much more difficult situation. So to us, the key is to have your listeners, our customers and producers prepare for what's coming. If you do, at least you have a shot at doing a better job than someone that has no idea what's coming. So
absolutely. Well, good information, Shawn. I'm Casey Seymour with Moving Iron Podcast. Make sure you check out movingironllc.com for all the latest news about Moving Iron and the different things that we're doing there. Also, check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, and my YouTube channel, Moving Iron Podcast. Shawn and I are live right now on there, so forgive the technical difficulties. It was day one, so it was being super nice to me. I appreciate that. Thanks, YouTube. And then also check out the Global Ag Network and all the great podcasters there. And Moving Iron Summit has been postponed due to COVID-19, which was coming up here next week. And we are going to do it January 20th through the 22nd, sorry. And it will be in Nashville, Tennessee. And Shawn will be the speaker there. He'll be talking about the great stuff he's talking about here in the podcast all the time. If you're a dealer and you want to come to that, make sure you go to movingironllc.com. And you can check out Moving Iron Summit, and they'll give you all the information that'll be up here this weekend. And it's open to everybody. So if you want to come, and doesn't matter if you're a dealer of agricultural equipment, hit me up and we'll get you signed up. So with that, I'm Casey Seymour with Shawn Hackett. Let's go move smart, folks. Out.